Welcome to this explainer. If you've been watching the crypto charts lately, you know that right now XRP is literally stuck in this super frustrating range. It's moving sideways, testing everyone's patience, and leaving us all wondering when the next real move is actually going to happen. And it's exactly during these high-pressure waiting phases that the wildest price predictions start spreading like wildfire. But here's the real question. Can XRP actually escape its range before an early-stage project like Alpha Pepe becomes the next massive X100 crypto? Today, we're diving into a story that is seriously shaking up the community. Ripple's CTO, David Schwartz, just delivered a heavy logical reality check on that viral $10,000 XRP price prediction. We're going to break down his core arguments and contrast XRP's mature market with the explosive discovery phase happening right now on the totally opposite side of the crypto spectrum.
So, here is our roadmap for today. First, we'll tackle the $10,000 XRP myth, then look at how forward-looking markets actually function. After that, we'll face the hard market cap reality, debunk the idea of a magic price switch, and finally ground our crypto expectations. Let's get right into it.
Section 1. The $10,000 XRP myth.
Okay, so when an asset trades sideways for a really long time, it creates this intense psychological pressure zone, right? Buyers jump in expecting a massive breakout, but when it doesn't happen quickly, confidence kind of just fades. To combat that frustration, the community often points to these viral valuation models, formulas calculating future prices based on stuff like economic activity, velocity, and supply. And hey, on paper, these mathematical models look incredibly convincing. They promise these unbelievable levels and give people immense hope. But David Schwartz hit the nail on the head here. He pointed out a massive flaw. Mathematical formulas do not dictate markets. Real, actual investor behavior does.
This psychological cycle is super powerful. Buyers lose confidence, sellers get aggressive, and the price just gets stuck bouncing between support and resistance. Which brings us to the stark reality of the current trading price, about $1.37. The market desperately needs a clear catalyst to break out of this tight range, maybe massive institutional momentum, regulatory clarity, or a broader macro rally. But right now, we are stuck near a buck and change, and Schwartz uses this exact reality to totally dismantle that $10,000 prediction.
Section 2. Markets are forward-looking.
So what does a forward-looking market actually mean? Basically, it means investors do not sit around waiting for an event to happen before they react. No, they price in their expectations way ahead of time. Big money, hedge funds, institutions, they're aggressively hunting for asymmetric bets. If they foresee even a tiny probability of massive future gains, they are buying that asset today, pushing the price up long before the event ever even occurs. Schwartz walked us through this really powerful hypothetical scenario. Think about it. If serious, rational investors truly believe there was just a 1% chance, just 1%, of XRP hitting $10,000 in the next decade, the price would absolutely not be sitting near $1.37 today. Asymmetric betting would have already pushed it much, much higher. It would probably be hovering closer to $20 right now, simply based on that calculated risk versus reward.
The big takeaway here is absolutely crucial. Markets are driven by probability, not just possibility. I mean, sure, anyone can imagine a crazy high price target, but the complete lack of institutional buying pressure at 137, that tells us exactly how the broader market views the probability of a $10,000 XRP. If the smart money actually bought into the hype, you'd be seeing it actively reflected in the price right this second.
Section 3. The market cap reality.
To really wrap our heads around the sheer, massive scale of this $10,000 prediction, we have to look at the unforgiving math of market capitalization. Right now, XRP's market cap sits at a very healthy $85 billion. That makes it one of the biggest cryptos in the world. But to hit 10 grand a coin, that valuation wouldn't just surpass Bitcoin, it would literally dwarf it. We're talking about a market cap that would have to rival entire global economies. It's like comparing a swimming pool to an ocean.
To genuinely support that kind of astronomical valuation, XRP would need massive, worldwide adoption. We're talking seamless integration across all global banking and a completely unprecedented transformation of the entire financial infrastructure. Now, is that theoretically impossible over a very long timeline? No. But that level of built-out infrastructure simply does not exist today. Tacking a $10,000 price tag on the asset right now is just incredibly premature.
Section 4. No magic price switch.
Because XRP has been stuck in this tight, frustrating range, you start seeing these rumors pop up. Some investors actually believe Ripple is deliberately holding something back, but Schwartz was super direct about this. There is no secret tool. There is no hidden master plan. There is absolutely no magic switch that Ripple can just flip to artificially guarantee a sudden, explosive price jump. Ripple is a real company operating within normal, predictable market conditions.
And that brings us perfectly to NDAs or non-disclosure agreements. The community has gone wild speculating about these corporate contracts, basically assuming they're masking massive top-secret government deals that are going to catapult the price overnight. But we really need to ground this speculation back in standard corporate reality. Ripple currently has over 1,700 NDAs, and Schwartz explains that this is, well, perfectly normal. It's just standard business practice. These agreements are literally just there to protect partner confidentiality during routine operations. They are definitely not a sign of some secret, imminent global rollout. Grasping this fact is so important because it helps us separate genuine, measurable utility from wild internet conspiracy theories.
Section 5. Grounding your crypto expectations.
Okay, so when you're dealing with an asset like XRP, the logical move is to acknowledge its strong fundamentals, but completely question those emotionally driven viral predictions. XRP is a highly mature asset. A ton of its value is already known, deeply analyzed, and priced in by the market. When it does move, it's driven by major macro trends and institutional flows. But to really get this, we have to contrast XRP's mature market with what's happening over in the early stage discovery phases of crypto. Because let's be real, when people are dreaming of a $10,000 XRP, what they actually want is a 100x return. And historically, those explosive gains tend to come from projects that haven't been fully priced by the market yet. Take AlphaPayPay, for example. It is telling a completely different story. Unlike XRP, AlphaPayPay hasn't even had its full market debut yet. It's sitting right now in stage 5 of its presale, priced at just 0.001602 after the last stage completely sold out. It's already pulled in over $1 million and brought in more than 8,100 holders waiting for its expected Q2 listing. But what actually separates it from the usual hype is that it already has a live revenue-generating AI decentralized exchange called AlphaSwap, backed by a perfect score on its public audit. So when you're looking at something like AlphaPayPay, you're looking at investors positioning themselves before a major event, public liquidity. That is where 100x discovery potential actually exists, because the broader market hasn't caught on yet. With XRP, you're trading a mature asset that requires massive macroeconomic shifts to explode. They are two totally different games, and you absolutely have to know which one you're playing.
And that really brings us to the core lesson from David Schwartz's reality check. Watch what the market does, not just what people say. Whether you're playing the waiting game for a technical breakout in XRP's sideways range, or you're watching active early-stage capital flow quietly into discovery projects like AlphaPayPay, real money movement will always speak much, much louder than viral social media formulas.
I want to leave you all with this provocative final thought. Are you investing based on probability or possibility? It's a question that should seriously guide your portfolio strategy long after this explainer ends. Thank you so much for joining me to break down this fascinating market dynamic. Stay focused, stay logical, and I'll catch you in the next explainer.